Hi, friends. Chris Kelly here. Hey, late in the week and that time of the week, time to take a look at stats, see what's new and exciting in the world of statistical data around the real estate market in Portland Metro. Um, Beyond that, I'm going to take a maybe a little broader take on things. But let's jump into the data first and take a peek at what's going on. Uh, and again, nothing dramatic. Pending sales are down a decent amount actually week over week. Um, of course they are. Rates went up. And that has a lot to do with it. And again, the seasonality has a lot to do with it. You get into that. There's a couple of cyclical lulls. Sometimes they're worse than others, and other things like interest rates and other variables certainly have an impact on how much of a lull they are. But all other variables notwithstanding, there's the post-school year starting lull, and there's the post-holiday lull. Those are the two major cyclical lulls in the real estate market. So, a combination of that and the fact that interest rates have, been doing what they're doing, sure, of course, that's going to be down week over week. So, not entirely surprising. And again, I get concerned when there's trends, and and by trends I mean when there's a bunch of weeks of something going on in a consistent manner. That's more concerning than a week of pending sales being down. But nevertheless, that's the data. That's what it's showing. Median and average sales price back up. Kind of have been on their way back up. But they, like I said, that just kind of happens. They've been bouncing around between the median between 5.25 and all the way up close to 6. And this one bounces down to about 560, 550, and all the way up to almost 7. So. Pace of the market, which is this average / median days. Again, it's getting slightly slower. Again, the cycle or the cyclical nature or the seasonal nature of things, but not inconsistently slower with other years. I mean, this is a part of the year where it started getting slower, but it started getting slower because the market was doing what it was starting to change, or by this time it was well into its change. But 2019, it was cyclically slower. That's why these numbers in 2019 elevated some. So again, we're just not behaving that differently from 2019, except the number of transactions is off across the board: new listings, pending sales, and sold listings. So there is physically less going on. I mean, every article I've posted for those that look at them, and I'll post another one here today, actually. Every one of those articles talks about the fact that the number of transactions are down, but sales price has either leveled or has continued to increase depending on where you are in the country. Since we're talking about the Northwest and Portland Metro in particular, sales price is very slightly up or very slightly under, depending on price point and what particular sub-market of Portland Metro you're in. But for the most part, prices dipped and prices recovered. And they've done that in the face of interest rates going up and then dropping a skosh and then going back up again. So that just speaks to the power of a lack of inventory, because inventory numbers, as evidenced by these numbers right here being low and consistently low, inventory numbers have really been the thing that's kept pricing where it is. Here's what I'll say, though, and this is kind of what I wanted to talk a little bit about today. And before I get into that, there's an article I'm going to attach about home prices. Basically everything I just said, and it breaks it down by region. So decent read, worth spending a couple minutes. It's not very long. So, I've talked about this off and on before, but there's opportunity everywhere in the market. I've been doing this a very long time, and I can remember a couple different places where the markets, had some capitulation, and But the big one, of course, was the recession that happened really later here in the Northwest. It really hit us at the end of '08, beginning of '09. But there was that couple of year period from '09 to through 11, and really into 2012, where it was tougher. But here's the thing you don't hear about that often. There's all kinds of quotes. Be looking for opportunity when there's blood in the streets, and that kind of thing. But really, all of that aside, what you don't hear a lot about, there are people, and I know some of them, that absolutely killed it during the recession, during the Great Recession of 2009, 10, 11. There are people that really made out well. Even in my industry, there are people that made it work for them. Some people did some reimagining or rebranding of themselves. A lot of people became distressed property specialists and short sale specialists in particular. But the thinking is what's important. Times change. And when you're doing something a certain way and the circumstances or the times change and the way you're doing something doesn't, it's going to get worse. And it's going to, unchecked, it's going to be a cause for frustration, anger, and all that goes with it. Here's the deal. Opportunity exists right now. Interest rates are higher. Prices have remained higher. How can I possibly say there's an opportunity in that? I can say it because I believe wholeheartedly, based on the information that I intake on a regular basis, I believe that prices are going to go up, and they're going to continue to go up. And once interest rates do get to a place where they're dropping and they're lower, the rate that price goes up is going to be higher. It's going to be slower at first. So for the investor, that's a different set of lenses or a different set of different lens to look at things through. When I touched on that, I think last week, as an individual buying a home for you or for your family, what have you, it's an opportunity that might exist, that might require taking a longer view, that might require taking some steps to get to a place where it's better. I've talked a lot about, hey, maybe you buy something with a higher interest rate, arguably at a lower price, and then refinance it later. That's an example of recognizing that there's a better opportunity today. This is just on the economics than there might be by waiting. Now, I'll just be honest, I'm not that good. I'm not going to be able to tell you, hey, the market's going to change for the better May 12th of 2024. It's not, I'm not capable of giving you that kind of specificity. But what I do know, or what I do believe completely, is that interest rates will eventually come down. And what's eventually, 6 months from now or 18 months from now? I don't exactly know because I don't have that crystal ball, but it's going to happen. And the opportunity is recognizing that that's true and taking action if it makes good sense for you and your family to take action accordingly. Again, this plays out in life decisions. I dealt with a lot of people that were living right here during the recession. I was one of them. Times were tough for us as an industry and for me as an agent. But I'll tell you, personal transparency, my shortcoming at that time was reverting to survival mode and really not digging for the opportunity in the time. I could have done better during that time period than I did. I survived fine, but I could have done better by taking today's advice back then. I didn't spend a lot of time lamenting about the market and about things. I'm grateful to say, but nevertheless, I missed the opportunity. When you look back, because clarity, hindsight's always 100% clear. When you look back, there was a lot of opportunity there. And you couldn't, I mean, going backwards, you couldn't have screwed up making a real estate buy. You could have paid too much for a piece of real estate in 2010 or 2011 and done spectacularly over a decade. So it all comes back to this. Be willing to stop, put your anger in check, put your frustration in check, look for the opportunity. Is it the right time for you and your family to be doing something? If it is, go make it happen. If it's something to be considered, sit down with somebody like me. I'm happy to help, but if not me, somebody like me, and walk through the pros and cons. Maybe it's better to wait. There are circumstances where that's true. I'm not here every week to come tell you, you should buy real estate now. It's not like that always. I would just say it's not all doom and gloom all the time, like a lot of social media that's designed to get clicks would have you believe. So I just think finding good advice is a big deal. I also think that checking your own head is a big deal, and making sure that you're stopping and evaluating and taking the longer view when and as necessary. So anyway, I know that's kind of an aside and a little different than looking at specific market data, but I just thought it was worth talking about. Anyway, as always, I know I say it every week, but as always, I'm here for you and yours. If there's something I can be doing, I just want you to know that I'm here for you. My team's here for you, and we'll get to it in whatever capacity you need us for. So feel free and reach out. And as I always say, till the next time.